All right, guys. Welcome to another YouTube video, right? This is your admin Prince FX, and today we are going to talk about directional bias, right? Part two. In our previous video, we talked about part one of directional bias, and I told you guys that I promised you that I'll drop the second video here, and this is actually part two for the directional bias. So please, if you haven't watched the first video, kindly go to the video section and then watch the video, subscribe, like, and comment, right? Because if you want us to keep on uploading videos, you need to appreciate our work as well, because there are a lot of valuable content that we are bringing, especially concerning trading, right? So please kindly subscribe to this channel and then share this video with other people as well. Right, so let's proceed with today's section. Today's section is basically we are going to dive deeper into directional bias. This particular topic is actually a major problem for most of you traders, right? You don't know when to buy, when to sell. You just take your trades without proper direction, right? But for you to get and for you to minimize your stop losses, you need to always trade according to the direction of the market, right? Like I told you guys in the first video that the direction of the market actually determines where price wants to move to. So you move along with the price or you move away from the price. Once you move away from the price, you tend up losing more money, right? But the moment you spot the right direction to move with, you are free to go. So what do we actually need in order for us to start this directional bias? You need to understand what market structure is. You need to understand that we have trending markets. You need to understand that we have ranging markets. So when it comes to directional bias, for me, I take note of these three things. The first one is, let me change this. The first thing that I take notice of is my trending market. All right. The second one that I take note of is a ranging market. Right. And the third thing that I look out for is my supply and demand zones. Right. So these supply and demand zones can also be written as, or can be in the form of an order block, a fair value gap, and a breaker block sometimes, right? So these are the three main things that I look out for when anytime I want to analyze the market. I I take notice of all these three things. What do I mean by a trending market? Right? Every pair or every asset that you trade, at some point you are going to see either one of these three things or all of them, or it can be just two of them appearing on the chart, right? Because not all charts or not all assets is going to give you trending markets, especially in the higher time frames. What do I mean by trending markets? It means you having higher highs and higher lows. It means uptrend, right? And then lower highs and lower lows, right? So these are trending markets. It's either you get, it's either you see this or you see this. So these ones comes in or it comes under the trending market. And then the second one that you need to consider is your ranging market. At certain pairs or at certain assets, price might not give you a trending market, but at a particular instance, price might be giving you ranging market. Some people also call it the accumulation market, right? these markets, right? Price can give you a trending market or a ranging market, right? And the last thing that I mostly look out for is my supply and demand zones. Sometimes the market might not be trending upwards. The trend might not be very clear, and the range too might not be very clear. So what I look out for is my supply and demand zones, which can be another block, fair value gap or a breaker block, right? And these supply and demand zones must align with structure, right? So these supply and demand zones must align with structure. You don't just mark out any supply and demand zones. I believe most of you know how to mark your structures very well, right? So looking at the trending markets, for example, I'll give you guys scenarios using Euro USD, the current, sorry, XAU USD, using the current trend or what is actually going on currently on XAU USD. So I'll delete all this noise, right? And then show you what's actually going on. So looking at the 4 hour time frame here, looking at this 4 hour time frame, you can see clearly that gold is currently trending, right? So this is actually a trending market because price is giving me higher highs, higher lows, higher highs, higher lows. And what do I mean by trending? It must align with a particular trend line. You can see this was the last low, let me say a low before price made the all-time high. So you can see that gold is currently respecting this particular low here, right? And if you draw this trend line all the way here, it aligns with this. And whenever you want to draw a trend line, always it must touch 2 points to be confirmed as a trend line, right? So this is actually a trend line, a clear trend line that gold is currently respecting. So this is what I mean by a trending market, right? The skeletal view of this is going to be something like this. Price will be giving series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So prices are currently respecting this trend line. So this is an example of a trending market, and you trade in line with this trending market. What do you do when price gets to these trend lines? What do you actually do when price gets to these trend lines, right? What do you do? You always use confirmations because this is actually the higher time frame, the 4 hour time frame. And when you just enter a trade from this trend line, when you enter a buy setup from this trend line directly, your stop loss is going to be very huge, right? And sometimes too, price might come all the way to this trend line and fail. So you need confirmations at these zones. What confirmations do I look out for? What confirmations do I look out for? I look out for a market structure shift, right? But before that, let me proceed with something here. So let's say we've already drawn our trend line and we are expecting gold to tap to this trend line and then give us a confirmation here. Once price gets to this particular trend line, this is what you do. You wait for when you scale down to the lower time frame, maybe the 30 minutes time frame. You can see whilst price was coming all the way down here, price was making series of higher highs, lower highs, lower high, lower low, lower highs, lower lows, lower highs, lower lows, right? So it means that currently in the 30 minutes time frame, we are bearish. But our overall bias says that we need to buy, we need to take buy entries from this particular zone. Right. So since we want to take buy entries, we need a market structure shift, right? What do I mean by a market structure shift? Some people also call it a change of character. So we need a last lower high to be taken out, right? So once price takes out the lower high, that is not it. You wait for your inducement to form. You wait for an inducement, a proper inducement to form before you enter. So this is actually my inducement. Inducement here. Then I'll enter rather from a point of interest, which is another block or a breaker block closer to this inducement. So this is the confirmation that you need at this particular level here. Currently, gold give us, when you scale down to the 15 minutes time frame, you can see it was also like that, right? When price came all the way down here, price gave us this market structure shift, as you can see here, right? So this is the market structure shift. After this market structure shift, you need an inducement, and price actually created some sort of liquidity here, right? As you can see here, before the market structure shift, but there was no proper point of interest, right? Since there is no proper point of interest, you don't enter. The fact that you have all these confirmations doesn't mean you should enter. If there is no proper point of interest, there is nothing like another block, a breaker block, a proper fair value gap or whatever here, right? So it means eventually I won't enter from here. And whenever price wants to buy from a particular zone, no matter what, price will give you an opportunity to buy. So sometimes you don't have to rush yourself into the market. So I later saw this trade was taken at, I think it was on Friday. I later saw this again. Since we want continuation, and what do I mean by continuation? Continuation, for continuation setups, you need something like this. You need what we call a double break of structure, right? For continuation setups, you need a double break of structure, right? What do I mean by a double break of structure? So you can write this down in your note that for reversal setups, for setups like this, since we need a continuation, we need a market structure shift. Then for continuation setups, we need a double break of structures for continuations. So price gave us this double break of structure. Out this high. The same leg, this particular leg, also took out this particular high. So that is a double break of structure for me. Then price gave us this inducement. And that is how most of you saw me buying from this particular order block here last week, Friday, right? I think those who follow me on Twitter will see that I had this buy here, right? So that is it for XAU USD. I'll do some analysis on GBP USD as well for the supply and demand zone. So that is an example for the trending market. For the ranging market as well, sorry, for the supply and demand zone as well. Looking at here is a daily time frame. Yeah, you can see price give us a break here, market shift here. So this is actually trading in line with structure. I told you guys that when you are picking entries from the supply and demand, you have to pick demand zones or supply zones that aligns with structure. So this actually aligns with structure. This is our liquidity, right? And once price took out that liquidity, it tapped into my daily order block. That is my supply zone, right? That is my supply zone. And once price got there, I just scaled down to my 30 minutes time frame and then took a sell from. That is why you guys have been seeing me, those following me on X have been seeing me selling or shorting on GBP USD for some weeks now. So this is an example for the supply So it's very simple. Once you open any chart, you check whether there is a trending market, whether there is a trend that price is currently respecting, or there is a trend line or whatever that price is respecting. If there is no trend line, it means that there is nothing like trending market for that particular pair. Then you move to the other criteria, which is your ranging market. If there is a ranging market, let me give you an example for the ranging market. If you can see a ranging market in your higher time frame like this, right? It is the same thing. It is the same thing. So this one here will be your resistance, your support. So whenever price moves from down here to this particular supply here, you scale down to your lower time frame and look for a market structure shift. So price will be doing something like this in the lower time frame. Once price gets to your support or your supply or resistance level, you wait for a lower time frame market structure shift, liquidity before you sell, right? And when you are selling, you don't target the last portion, right? Let me use the GBP USD trade for an example. As you can see from the daily time frame, we are selling all the way to this particular low here. But that doesn't mean I should place my trade here and then extend my TP all the way here. It doesn't work that way, although it might work, especially for the swing traders. But when you're a day trader, you just take your profits at resistance level or support levels, like I told you in the first video. So let's say if you want to sell from here, your target should be the next support, which should be maybe around this area. Then you leave, or around this area, then you leave before you look for another entry, which is another sell entry. And when you need continuations for sells and buys, you don't need market structure shift again or change of character again. You need double break of structures, right? You need double break of structures like this. Price should take out 2 consecutive zones. And once price takes out those 2 consecutive zones, you wait for price to give you an inducement before you start selling. So for continuation of your directional bias, you look out for double break of structures. But for reversal, that is your first move, you need a market structure shift, right? So if you are selling, if you're a day trader, you just take sell trades throughout all the way to your take profit, to your daily take profit. Once your bias is complete, you wait for price to do its own thing before you look for another entry, right? So it is very simple as that. What you need is your trending market, ranging market, or supply and demand zones, right, to pick your directional bias from. Some people go all the way beyond daily time frame. They go to maybe the weekly time frame or the monthly time frame. It is still the same thing. If you can see your bias clearly on a weekly time frame or daily time frame, it doesn't change anything, right? But it shouldn't be below 4-hour time frame. For me, that is my rule. My bias is not below my 4-hour time frame. It is 4-hour time frame and above, right? And when it comes to the confirmation, I don't go below the 15 minutes time frame unless maybe it is not really clear. Market is actually very volatile. That is when I go to my 15 minutes time frame for confirmations, right? Before I end this video, I would like to give you guys a little advice on sending this trading thing, right? Some people actually have capital, right? If you have a capital and you want to be a good trader, You don't deposit all your capital into your brokerage account. You don't do that. You divide your capital into maybe three, right? You can decide to deposit one into your brokerage account, or you can decide to go and buy a prop account. And then the remaining two, what you do with that remaining two is you use one of the remaining two to invest in your education concerning trading, right? And then the third one is for getting yourself softwares like backtesting tools and then journaling softwares, right? Because they are all premium. You can't just get them for free. Most of you backtest on free softwares. It is not really advisable. Get yourself a TradingView premium and then backtest your strategy. Backtest your strategy. So you can divide your trading capital into three. One for studying, buying courses, paying for people to teach you, because that is the only thing that can help you. And then the other one is for you to invest in whatever you are learning, which is applying them, backtesting the strategies, and you can backtest on TradingView Premium. Subscribe to it. Don't just go and deposit everything to your brokerage account to make money. At the end of the day, you might make money, but you might lose everything because you have limited knowledge. So that is the little advice I have for you guys. Thank you for this video. Kindly subscribe to this channel once again and then share the link with other people as well. Stay blessed.